Hello, traders. FX Pip Collector here. Today is Tuesday, March 4th, and this is my morning video where we like to take a look at the US dollar pairs, including gold, and we also take a look at a couple of the JPY pairs. If you haven't done so already, definitely check out my free Discord trading community, linked at the corner of the video at the end or in the description of the video. If you'd like to check out my website, you get access to all these benefits listed below and more at fxpipcollector.com. So anyways, I always like to start off by looking at the news calendar. There's really actually nothing whatsoever on the news today. Today's Tuesday the 4th, and there's really no news whatsoever today. But that definitely doesn't mean there's not going to be some big moves. Now, President Trump is speaking again. It's 2 a.m. in the morning, my time. It must be, what is that, 9 p.m. Eastern Standard Time, where DC is. And apparently, he might have something important to say. Some big announcement, I guess, apparently. But then we also have GDP for the Aussie, and we also have somebody from the Bank of Japan speaking this evening. So no news in the New York session, but today's Asian session definitely does have plenty of things going on, especially with Trump, that's for sure. So, anyways, I always like to start off at the US dollar index. If we can figure out what this US dollar index is doing, then we pretty much know what to do on all the US dollar pairs. Now that we have this break of structure to the upside on the daily time frame on the US dollar index, I still think there's a good chance that we're going to get potentially even 5 waves up now. I still think that now we have this break of structure, there's a good chance that this really is an A, this is a B, this is a C, and then we're probably going to get another 5 moves up and probably even go up and take out the previous highs. There's definitely a chance that it turns into like 3 waves down, 3 waves up. But if that's the case, then that's probably going to be like a 3-3-3 pattern or a 3-3-5 pattern, which I don't really think is the case. So, anyways, we need to keep this US dollar analysis in mind as we look at all of the US dollar pairs. Moving on to the euro dollar. Big, giant move up yesterday on the euro dollar and the pound dollar, as you can see. Now we'll see. I mean, this still could end up being a bottom, like I've been talking about the last couple of weeks. This still could possibly break out and just keep on going. I kind of hope that it does do something like that because that would be a huge uptrend on the weekly, monthly time frame that potentially we would be trading to the long side for probably months. But to me, because of the US dollar index, I still think that the dollar index is likely to go up, which I still think is likely going to cause a push down on the euro dollar and all the other dollar pairs. To me, this looks like more impulsive, like maybe 3 waves down for A, maybe 3 waves up for like a B. I think potentially we could make 5 waves down. Maybe we will make a higher low, and then start that big move up that we've been anticipating. But we'll just have to see. It possibly could go all the way back down to parity. Moving down to the 1 hour time frame, not a whole lot has happened since last night's live stream. Last night I was saying that if the euro dollar went down and broke structure, then I would possibly take it as a short. We still don't have that breakdown, so I still would not have been recommending any shorts. If you were trading a very short time phase, I guess looking for longs would still definitely be the way to go. Now we have what looks like 1, 2, 3, 4, 5 waves up. We are sitting at the 78%, so the same thing applies. If it goes down, if it breaks and holds below structure, breaks and holds is a big key, not just reject structure, then I still think it would probably be a pretty decent short, and there's a good chance that it would actually just continue the downtrend. So keep an eye. If you see the break and hold below structure, I would switch it up, start looking for shorts. If you don't see the break and hold below structure, then you would definitely continue to look for longs or potentially hold on to any longs that you possibly are already in. So moving on to the pound dollar. Pound dollar, same type of thing, except for the pound dollar did go up and make a new high. I have my Fibonacci retracement on the last push down right here because that's where the last series of lower lows, lower highs started. We are closing above the 78%, which is a pretty good sign that it probably will eventually go up and break this high. Maybe it will go down and make a pretty significant pullback, but I think it will end up making a higher low significant to this low, and it will end up making a pretty decent push to the upside when it's ready. So keeping that in mind, if we go down to the 4 hour time frame, I want to stop there real quick because since the last correction right here, it definitely looks like 1, 2, 3, 4, 5. It looks like we're potentially in a wave 5 right now. Most wave 5s do go to either the 61 or the 50% Fibonacci extension of wave 3, projected off of wave 4. So we might have a little bit more upside potential, but we'll have to see. Let's throw the 38% on there real quick. Just give me 1 second and see what that is. Yeah, we're kind of right in the middle of two Fibonacci levels right now. So we'll see. I think the same thing has to apply on this one. If we do get a nice break and hold below structure where it holds below structure with momentum, then I think at that point we would have to start looking for shorts because it potentially would be the end of a wave 5 wave pattern on the 4-hour time frame. If we don't see this picture right here, we don't see the break and hold below structure, then I would definitely still suggest longs. It does kind of almost seem like it possibly would go up to the 50% because that's normally a target for wave 5 is the 50% or the 61% of wave 3. So if it breaks and holds, definitely switch it up, start looking for shorts. If it doesn't break and hold, then I would actually keep on looking for longs. Moving on to the Aussie dollar. Now, the Aussie dollar is very, very weak because of the Aussie. I still think there's a good chance that this move down possibly could make a higher low, but looking at the dollar index, I think the dollar index has a lot of upside potential, which means that this may have a lot of downside potential. There is a chance that this move up was just another ABC correction, and now we're just back into the downtrend. So we'll have to keep an eye on this. If you are looking for shorts, this is probably one of the better ones to be shorting. Now, I don't really think I would want to go short right now, but I do think there's a good chance the dollar index could push up a little bit. And if the dollar index pushes up a little bit, then this would potentially keep on pushing down. So it's hard to say. I mean, yesterday we had a perfect 1, 2, 3 way pattern up, a perfect impulsive move down. That was like a picture perfect ABC correction. And I personally would still recommend looking for these picture perfect ABC pullbacks. I wouldn't really be trying to go short now, but if you do see another push up, another like 3 way pullback, another impulsive move to the downside, then I would definitely continue to look for shorts at the end of any 3 way pullbacks that I may see. So definitely still looking for shorts. I have no idea whether it really is going to make that pullback right now. It potentially could just keep on going down. I'm just saying that if it does make a nice pullback, we definitely should be ready to go short again for the continuation of the downtrend. Now, the Kiwi dollar is exactly the same as the Aussie dollar, which is why I don't cover it. I trade it exactly the same. US dollar CAD. Now, the US dollar CAD, I still think could possibly make a lower high, and I still think there's a good chance that this could just end up being like an ABC correction to a downtrend, maybe even like a wave 1 and a wave 2. But primarily, our focus should be longs right now because we have a break of structure to the upside. And if we think it's a wave 2, but in reality, it's just a continuation of the uptrend, and we're looking for longs on shorter time frames, it really shouldn't create any issues for us because we really should be looking for longs in an uptrend anyways. Now going down to the 1 hour time frame, definitely has that 1, 2, 3, 4, 5 look to it, doesn't it? It has 1, 2, 3. This is potentially a wave 4. Maybe we have a wave 5. Maybe it will try to make another one more push up and hit the Fibonacci level. And I definitely would definitely recommend looking for longs unless you get a nice significant break and hold down. If it does go down and break structure, then most likely the next move down would be a crescent to the move up like a wave B. So if it does break structure to the downside, first thing I would do is do my Fibonacci retracement on the whole move up, and I would be anticipating that the next move down is likely a wave B, which would be a crescent to the whole move up. So definitely keep an eye out for that. Until we actually get a break of structure to the downside, you could possibly continue to look for longs. This definitely does have that 1, 2, 3 look, so it probably will end up trying to make another attempt up, probably towards that 61% Fibonacci retracement from the higher time frames. Moving on to the US dollar Swiss. Now, this is actually one of the ones that I was really convinced on the weekly time frame may have ended a correction. I mean, it definitely has 3 ways down right here, but we'll have to keep an eye on it. Boy, it is definitely getting pretty strong to the downside. What I have now is I have my Fibonacci retracement on here. I'm definitely looking for a higher low. I'm definitely looking for a Fib bounce and a nice push up. I still think there is a chance that this is going to turn out to be a 1, 2, 3, 4, 5 to the upside, and then it's eventually going to go up and grab this liquidity up here that's sitting up here. So we definitely need to keep an eye out for a higher low on sort of time frames. Going down to the 1 hour time frame, we got our Fibonacci retracement on this whole move up right here. So what I'm looking for is I'm looking for a Fibonacci retracement bounce. So if we get a nice Fib bounce, we get a nice break to the upside, a nice engulfing move at a Fibonacci level, then at that point, I definitely would switch it up and get back on the long side for sure. Like I was saying, this could be a wave 1, this could be a wave 2, and it potentially could go up for a big old wave 3. If you never see that big of structure, you never see that big engulfing turn to the upside, then potentially you would not be trying to go long. potentially you would be holding on to your shorts and maybe even looking for more shorts. So keep in mind that the trend is your friend. There's definitely no sign of the trend turning up yet. We are waiting for a nice fib bounce, a nice engulfing move to the upside for potentially the continuation of the uptrend. So going down to gold. Now gold, I do see the possibility that gold might just keep on going up, to be honest with you. I mean, this could be just an expanding crescent right here, and it possibly could just keep on going up from here. My target was this 261.8 to $3,000 an ounce area, which we still haven't hit yet. But because of the symmetry that we have going on here, and the fact that this looks like a nice five waves up, I still think there's a good chance this is an A, B, and then it goes down for a C, and then it goes back up. Like this is a wave one, this is a wave two, this over here is the wave three, this is a wave four, and then potentially back up for wave five. So I'm definitely still keeping an eye out for that being the most likely possibility. But sometimes what we think is a wave B is actually the continuation of the uptrend, and it may just keep on going up. So going down to the 1 hour time frame is where we have a Fibonacci retracement on here. I got my Fibonacci retracement on the whole move down. Now this has definitely got what I would consider five waves. So if it does, I don't know if it's going to, but if it does turn down and break, then I would expect the move down to be a crescent to the move up like a wave B. This would probably be like a wave A, and then eventually back up for wave C. So if we see these three waves up, then I would definitely say that's a wave B, and that this is a wave A, and that we really are in that ABC of wave four that I was talking about on the daily time frame. So I definitely am keeping an eye out for this scenario. Now, this all depends on whether we get a break to the downside. I mean, it may not even make the wave B. If it really is the continuation of the uptrend on the higher time frames, it may just go up, bounce, never break structure, go up, never break structure, and just keep on making those higher highs, higher lows. So if it keeps making those high, low, high, low, high, low pattern on this 1 hour time frame range, then definitely keep on looking for longs every chance you get. If it breaks the high, low pattern, goes down and breaks structure, then I would put my fib on there and expect the next move to be a wave B, probably a wave B of a wave B potentially. So keep that in mind. Let's move on to the US dollar yen. All the yen pairs made another pretty significant push down. I mean, if you've been following along with my videos, you know that I do still think that there's a good chance that all the yen pairs are in a big downtrend that potentially is going to go way down to potentially maybe the 134 area and maybe even lower, 132 maybe. So I'm definitely still pretty bearish on the yen pairs. I've been recommending shorts for weeks now, and if you would have gone short yesterday, add a nice Fibonacci bounce, add a nice push to the downside, nice big old engulfing move, that would have been an amazing trade. Now, I am definitely still suggesting shorts, but I definitely don't think I would be trying to go short right this minute. I would potentially be holding a short, but I wouldn't be looking for a new short. If it does make a pullback, which I have no idea if it will, now I'm just saying if it does, it potentially could keep going down. If it does make a pullback, I would definitely still recommend looking for shorts at the end of every pullback I see. If the higher time frame is correct and we have a lots of downside potential on all of these yen pairs still. So I'm definitely still keeping an eye out for shorts. You kind of missed the trade if you're not in it already. The entry was yesterday. If you're not in it, then you kind of have to be waiting for another pullback patiently to go short again for the continuation of the downtrend. Moving on to the euro yen. The euro yen also made a pretty big push up yesterday, but just like all the other yen pairs, I'm still looking at this as likely going all the way down to this area, maybe the 146, 145 area, to make a big old giant wave C of wave 4. So right now, what I have is I have my Fibonacci retracement on this last move right here. Anything I see to the upside, I am definitely still going to assume there is nothing more than a crescent to the downtrend. So as long as it doesn't break the highs on these higher time frames, like break structure, I am definitely still looking at all moves to the upside as nothing more than a pullback in a downtrend. So going down to the 1 hour time frame, definitely a very strong move to the upside, and I know definitely you could have made some pretty nice money on that move, but it was definitely a 1, 2, 3 way pullback. It was definitely another ABC correction. I am definitely still suggesting shorts, whether it just keeps on pushing down from here or whether it makes a nice proper pullback. I have no idea. But I do know that if I do see another 3 way pullback, then I definitely would still be suggesting to look for shorts at the end of any of these 3 way pullbacks that we may be seeing. So yeah, I mean place you see any of these nice little pullbacks, like I said, I'd be looking at any move I see to the upside as possibly nothing more than a correction to the downtrend. Moving on to the pound yen. The pound yen, like I said, because of the pound strength, that would be the one that if I was going to go long, would have to be the pound yen because of the pound strength. But I personally still am not recommending longs on any of the yen pairs, even the pound yen, because I still think there's a good chance it may end up pushing down and making this big old wave forward that we've been talking about for weeks. And yeah, there's still a lot of downside potential if that's correct. So just like the other yen pairs, anything I see to the upside, I would definitely be looking at as nothing more than a correction to the downtrend. So any push up, I would be looking at as nothing more than a pullback within a downtrend, unless it breaks structure on this higher time frames. So going down to the 1 hour time frame, definitely a huge pump up yesterday, but that is definitely one up, three down, one up. I bet this was a Fibonacci bounce, nice A, B, C cuts, and it was actually a really nice opportunity to go short. Potentially, you could have gone long and short yesterday and made a killing on some of these yen pairs. Now, I personally would definitely still be suggesting shorts. Whether it continues down from here, I have no idea, or whether it makes a nice pullback now, I have no idea. But I do know that if and when I see another pullback, I would definitely still be looking for shorts. I would definitely still be trying to get short at the end of any pullback I see on these shorter time frames. Because, like I said, until proven otherwise, the higher time frames are in a downtrend. Anything I see to the upside, I would be looking at as nothing more than possibly just a correction to the downtrend. So, anyways, thank you for watching. I hope everybody enjoys the rest of the day. And as always, happy trading.